Hello and welcome. It is the 12th day of September. The year is 2019. It's a Thursday. My name is Derek. Welcome. All bets, trades of the like within each its own risk and their own reward. For myself, risk reward management is always job number one. And I'm going to be taking a look at technical analysis on the Dow stock market. I'll move on to the SPY after this. But yeah, nothing much more. I don't trade anything amongst the stock market. I haven't made a market trade since 2009. It's been over 10 years now. However, I do have a little understanding, or some understanding, I'll call it. Well, I don't think little is a good word, of chart analysis. So let's take a look at it. Now, what the obvious here is that price action, looking at this on the 3-day term time frame, is practically at all-time highs. It's up here below where it was back in the middle of July. The S&P 500, the SPY, is barely at new highs. And we'll take a look at the NASDAQ. I haven't looked at that, but I would only guess that it might even be higher than the SPY. I don't know. But either way, it's going to be up. And well, what we've been seeing within the market is this little sideways consolidation pattern. And support has been inconsistent. Resistance has been consistent. As support first came up in here, 3 times hit with a lift off, a pair above it. And then it came back down again, but it had a failed breakdown on that point, or it just lowered at a low level. But it didn't spend much time below the original previous support at the area near 23,748. Near, not at. And inconsistent continuing. Now we're doing higher highs, or higher lows rather. Higher low, and then this higher low as well. Resistance, I can just put a horizontal ray in because, as I stated, consistency has been the name of the game. For resistance, that is. And I should do it on the original high. There. For the first time it hit it obviously hit it. I mean, oh my goodness. It hit it at this line when it first went up there. Yeah, of course it did. Nothing. It's got to hit some high somewhere. But when it came back to it, that's where it started to get interesting, where we have several days hitting it. One day having a nice pierce above. And then, of course, this big correction in here. And when you have a situation where you make a matching low, and especially a lower low, or another way of putting it, when you retrace between 85, and in this case, it retraced about 130%. Of the move. And retracing 130% means, okay, the differential from here to here, well, 100% is back to where it came from, so the additional 30% would be in here. So another way of stating it, it gives back most to all to more of its gains, and then it retests previous high. That in itself is I don't know, alarming sign. I mean, there's no alarm bells ever going off unless you literally have them set to do so, but you can say it's alarm bells ringing. Third X hit of resistance when it came down to it. So it did make the higher low. That's always so huge in those situations. So just because it goes below the 18 average here, when you have a huge move above it, well, what did at the time, I'm not going to move to it, but did the weekly chart show the 18 in here? Most likely. We'll take a look at that soon and we'll find out. But it found that support. And then using that same line, let me just put it back up in here again. And I want to go, oh, why is it doing that? There we go. So this time, after resisting it, it pulled, like I say, the higher low. Then it gets above it. So we're seeing the possibilities of that square, that failed move that I've shown many times before. The possible failed breakdown. But it found the higher low. There could have been a lot of signs beforehand stating, okay, yeah, that's a failed breakout. We're going to have a fast move lower. It didn't have a fast move lower, because it has successfully corrected this leg higher. Successful, of course, because it higher loaded and then it started to go higher again. This period and this red period was giving you a lot of cautionary signs that it wasn't going to do what it did. Rather, break support, at least test this level, maybe go lower. Didn't happen. There's the test of the 18, and now over the last 2 periods, we're looking at the triple day. Little small one up, and now back up to this level. So at this stage, with the higher lows, okay. Well, what I'm looking at from here on in is, well, we should be It wouldn't surprise me, that's a better way of putting it, if we make a new leg higher. And if we make a new leg higher, given how much resistance has been played in this, I would expect a decent leg higher from this point of 26,005. And right now here at 27.5 is most certainly not a decent leg higher. And I mean, the last one was just, maybe you can call it too huge. Okay, whatever. Maybe that could tell us again it's going to be very huge. And you can say all you want about it being overextended and now the Fed put all this currency in and we're going to have a recession soon and it's going to go down. And it's been up so much it's got to go down at some point. And that's the key one, at some point. And that's when you notice, when you say that, you could have said that here. Oh, it's up too much. And I'm going to go back. When we go to the more longer term, I'm going to use that ideology, oh, it's up too much, for the 1990s. Because when it was up too much, it went up a lot further before it went down. But I would be thinking at least up to here, conservatively, like around close to 30,000 on a conservative level. But even if it comes up to 35 or 36, and furthermore, we are in a situation where hyperinflation is a realistic future possibility. And what happens to prices of things during such? They go higher. So you could have situations where stocks can go up like 60, 80%, but that could technically be going down if you adjust it to inflation. That would be sick if it goes down adjusted to it, but hey, it's not like it hasn't happened before, or it's not like stuff like that isn't probably happening in other nations in this world. Amongst the weekly chart, we can see more of this same thing, but excitation of the 18 average of highs is coming in. That's always just, like, if you're looking to get into situations that look to be breaking out, to me, this is one of the things to look for on here, is when do we see it breaking out above it? Not every time it's going to work, but oftentimes you're going to get situations where you have fantastic moves. It had it here happen, but it only went here. But in a situation like this, if you're in spots where you don't mind waiting many periods to get your plays, if you were to go long here, thus you would have been late because you should have went long in here, then did you get stopped out here? Okay, if you didn't, then you're still riding the game. And maybe you did, maybe looking to get back in, but if you see it in here, it probably might be a good bet. Other times it did it. It broke it here, came through, it broke it here, higher load it. Now going back beforehand, we can see it had a huge run above it here, where the only excitation among the way would have been in here. But if you were looking for leaving the 18 after some sort of downtrend or good correctionary phase, well, we had this major resistance at 18,000. So at different times that it left it post this high was in here. And obviously something where a lot of people could have been stopped out on. Didn't go much higher after that. Then it exited it in here. But it successfully made a higher low. Further excitation here. You had to hold on a bit. So that just meant if you're trying to make a trade on markets, whether this is a weekly or the 5-minute time frame, it just might mean you have to wait to get your gains. And then, of course, breaking out here, that was the ultimate time to get in. Here, oh, and just ride this whole wave higher. Profit takes some here. And as I'm about to say on the long term, oh, something's up too much. Well, it looked like it was up too much here. And it looked like it was up too much here, and so on and so forth. But now, since we've had this long-standing sideways correction, bull flag, which gets this featured failed breakdown here at the around Christmas of 2018, it'll be interesting moving forward. And if on the camp of it's up too much, recessionary stuff and all that type of talk, you know what? I'm all for that type of stuff. But that doesn't mean that the top is 25, 26. As I stated before, I now wouldn't be surprised if it's somewhere in the 30s. When we take a look at these other time frames on the monthly chart, attempting to get above and exit the 18 here as well, after what has been a long sustained correction within this band, after having a long sustained breakout starting November of 2016 and completing on January 2018, and really for that matter it started correcting February, March of 2018 within this 18 average, and that's what it's been doing ever since. A failed breakout here, but so far a successful correction within its band. Look at this on the quarterly term time frame. As I mentioned about, oh, it was up too much in the 90s. Well, when it broke this level of resistance in here, And just like the 3-day and stuff and the weekly look for the Dow, well, this exact market, just many hits on a key level. Concise move on the expected breakout, and that's what happened when it left it in here. As of course, leaving the 18 average of highs was just a spectacular move, but you could have said here at 37.40, it's up too much. And then you say at 8,500, it's up too much, and all those sort of deals. And well, it was up too much, obviously, at 11,500. But by saying it was up too much at 3,500, it never ever came back close to it on any correction since. So you could have bet that it was going to go down here, and well, obviously, you were totally wrong. And another way of putting this is this thing could be, who knows, this thing could be en route to like 90, I don't think so, but you never know. It could be en route to 90 some odd thousand before it ever has any 2 to 3x price correction to the downside, or greater, of course, but minimum, we'll say 60% down move. So as far as 60% moves, let's just finish this off within the yearly term, which is something that's nice to be able to have on here. How many times has it ever done that? Well, the biggest one was the first one we see in here. Because this correction in here, just before it happened, was like going from 120 down to 66. That's not even 50% off. So no, we're looking for like 60% or more to the downside. Well, this one went from 390 down to like 42. That's very close to 10x. We'll say 9. So that's a supreme one. From this low, what was this? 618 and the high was 1,000, not even close. The top from the dot-com bubble, seen it go from 11.5 down to 73. Nah, not really. And this is 14,100 down to 67. So that's a 2x move, a little more. So only once, or twice rather, has the market ever had that kind of decline. You know, that's and from the first one, it took well, from this bottom to this top, we'll put the top in here. So we'll say end of the millennium. It took 68 years from this low to get to this top. So if it takes 68 years from here, we'll be talking about 2077. Now, I'm kind of kidding on that. I mean, who knows? I mean, maybe this will never happen. We have hyperinflation. It's like yada yada. We'll see. Again, I have to presume that at some point we are going to have a move lower, especially in hyperinflationary scenarios, and the owning of real physical assets of some sort, crypto crazes, precious metals, and sell-offs in here. The fact that the Fed has been basically keeping this thing pumped by the artificial printing over the last little bit, but then one make a camp they're just going to keep doing it at some point, and you know what? I guess time will only tell on that. Let's move on to short-term analysis, but to do so I want to use the SPY because obviously within it I got long-term data here. But if I go like say daily here and then 1 hour, I mean the SPYs will probably look better because on the single hour, what do we have with the Dow? Well, it's just coming up to this high, but more importantly, how do the candles look here? They look okay. And this being the ETF that represents the S&P 500, well, I guess it looks about the same. Either way, this green line represents the price now. And if you got close to 2020 vision, I know you got this little text up here, but price action is, okay, why isn't that coming down? Above that high. There we are. You can see here, new all-time highs because we're now at that previous 302. Let's just see, what was the high before? 302.22. 1 cent below, as I'm recording this, the previous all-time highs. Now 1 cent above. So right back there. So it barely has microscopically made new highs. But as far as how I concern it, it's a matching level. As far as today's session is concerned, one of those you gap higher. You establish this level of resistance, but we can see, interesting, just using the 5 candles to show what's going on for today. You start off gapping higher. We see that there was an intra-move correction. I would only assume that would happen at the start of the day. Closing near the top. This thing opened the next hour at this stage in here, and then back down to this low. And then we're just having this nice little grinding move back to this previous high. So things look like We could end the day pretty good. It's 1:48 p.m. Eastern time now, but I really want to just talk more about this for just showing how I look at charts more than anything, because this information could be good for anything that you any chart you put together. On the 15-minute term, we can see, yeah, exactly. It started the day off. It gapped here, so we had an early rally to start the day, and then it sold off down to this point. So we've established that level of support that it would eventually retest. Now, did this happen to be any key previous area? The answer to that would be no, because the previous area would have been as high as here, and it didn't go down that far. And from this point here, nice little retest of the level. And this is where Fibonacci analysis can be interesting. And when you're talking about, and I talk a lot about exponential and linear Fibonacci, or just the fact that I use exponential. When you're talking about Fibonacci on the most short-term microscopic levels, when the high is like, well, in this case it'd be 302 and like a third, and a low of like 300 and change above, both the linear and the exponential Fibonacci's would work out fine. So you should get almost the exact same numbers. Because what I'm going to do, I'm going to show you the formulas. I'm going to give some space. Exponential, the one that I use will be in the upper left, which is high divided by low. So this high divided by that, by what would be this low in here, this low, and then this high. And then I take that to the root of the fib percentage, which is, well, I'm going to be using the 2 of 38.2% and 61.8. So it would be 0.618 and 0.382. So I'm going to do two calculations. And then I'm going to take that number and I'm going to multiply it by the low. Now the linear Fibonacci is taking high subtract low, and then multiply it by the Fibonacci percent, and then add the low to it. So similar using the codes, but they're obviously different. So the high in here, let's just, we got 302.35, and that, so 302.35 is the high. I'm going to bring up my calculator. And this is the one that calculate exponentially. And I'm putting 30,235 in because this is going to automatically round it, and I want the penny numbers exactly, so that's the reason why. And then this low comes in at that of 300.42. So the differential of those is not even 1%. So therefore 301.16 and 301.61 would be your levels. And just an interesting fun fact, that if we break this level of resistance, it would only be luck if it breaks out if there's a key level at somewhere at around 303.55, which would be your upside target. 303.55. I'm looking at this, I'm thinking, no, it doesn't sound right. We're already at 302, but yeah, I forget this is extreme microscopic volatility. Okay, so 301.16 and 61. See, this one's easier to remember. I have a hard time remembering numbers, and especially two. But when it comes like this, it's easy, because now I know the next one's 61, and that's what I kept in my head. Oh, this one, I can actually do this. In that of remember the numbers, of course. 361 is the next one. And I'm putting these in because I want to see how this does, because I'm going to be going to the 1 minute term time frame, which I haven't even seen yet. Okay, excellent. But Fibonacci, again, an excellent tool for help determining how the market moves. So as far as the movement for today, and I guess the 4 minute might be the best way of showing it. All right, so we're looking at it from the high. So when we originally have this correction, it finds great support at the 38.2% down move. We reached this resistance, coinciding, I guess, within this move in here, within this general area. And when you have this move break down below, you would no surprise that a quick move breaking 301.60 would take you to this line. But this line did do a matching level, extra movements, and that in itself is a warning signal that did not play itself out. And that's why if you wait for breaks of key levels, say you're like, oh my goodness, I want to short because of a move going down like this. Well, first of all, if you're going to say it down toward this area, you're saying it after it's down a lot in an area where we should find support. So probably in itself right there, not a good idea to be short. And let's see how it plays out, because now we have a little bit of an up, down, up. Okay, yeah, that's the type of stuff we want to see. Establish some support and then break it. Then I want to consider a short play. So break right off the bat, breaking 347, and not until then would I do it. So in this case, you could look for the opportunity to go for it to go down, and it never gave it to you. But now when you come in, you see, okay, so we come up to the first Fibonacci line here, get above it, and then decisive quick move to this level. Okay, not a surprise. But it didn't come down to this level. Instead, we just paused it for about 5 or 4 periods. Got up to this level again, and all of the consolidation that happened in here was really telling you, hey, wait a second here. This, to me, looks like a failure that this happened, this complete sell-off. And in that, you got to give it some benefit of the doubt. So when you're seeing all of this, you can't be surprised that you have a retest of this level in here like this. You've already established this level of support, and you've done so, interestingly, above, not coming back to this level. And for now, it's been 3 periods on this showing strength at the 18 average of highs, that I would be given this serious credentials that for the rest of the day, I'll be interested to see how this goes. That price action, maybe not necessarily closing above or well above this, but reaching a price above it. Meaning, I wouldn't be surprised if it has a good move and maybe pulls back, maybe holds it, but I think there's a good chance that we could have continuation further gains. Let's finish it off within the NASDAQ, and also there'll be, I'm going to think about doing a recommendations video for the weekend. I'll see whatever it is that's on here, stock or whatever. If it's on TradingView, I want to get out at least 5, 6, 7 recommendations if there is that many. And if you put some out, there's a good chance at least one of them will be put out. So if you put multiple ones in, put in what your priority might be, or at least put the first one you put in, make that your priority. Because if there's a whole bunch of them, I'm probably only going to take one of what people will be recommending. And this is for anything. I'll be putting out this information or stating this on my crypto videos, on my precious metal videos, and so on and so forth. But if there's any stocks or anything else you'd like to see, I'll be putting them out for Saturday and Sunday. Okay, the NASDAQ, I have no 8,200. I remember 5,000 was a big level. 8-hour term. So it's not quite at previous highs in here, and all these gaps are just incredible. On the weekly chart, what do we got? We should be just consolidating near these highs in this area, yeah. Above these highs and this one here, but in that general range, exitation amongst the 18 average as well. And quickly, let's take a look at this on the quarterly. It's still a strong setup, so you can say all you want about the market's up too much, or it's got to go down, or give me whatever fundamental reasons you want. But until I see any type of evidence on here that it's ready to go over, then I'm not going to be buying it, at least not yet. And all the evidence is telling me right now, at least for the intermediate short term, is that the price action's only going to keep going higher for at least another leg higher on both situations, both short term and intermediate. Thank you for tuning in, and have yourself a great day. Bye-bye.